For joining us today. We are with Investment Management Group. My name is Lauren, this is Brian, and we're both in the real estate business, and so we are constantly getting asked questions about what's the state of the market, etc. So Brian, is an expert here and is going to be walking through a couple of talking points for us today.
Absolutely, and Lauren, I think you probably get the same questions throughout the entire holiday season. We're at bars and events, church, kids' soccer practices or basketball practices.
Grocery store.
And it doesn't matter where we are. When we say we're in real estate, everybody's asking what's going on with the market and when is the next crash going to happen.
Yep.
And I think the good news on all this is we actually going to have a very boring market in 2018 or 2019. That's actually a great thing because it helps us make really strong, great decisions. I always tell people you can make money all the way up and all the way down as long as you're making the right decisions. That's really where we come in to help in that. And so I think we take a very practical approach. We'll educate you on cycles and markets, but looking at this stuff, we're really looking at our stuff as a 3-year vision. What's going to happen in the next 3 years and pivoting accordingly. So I think we got a good starting point for 2019, what's happening, what to do, and how we can educate our clients in making the best decisions possible, whether that's their first time home or their next investment property.
Yeah, so let's just kind of just touch on the different types of market cycles.
So that's actually a great topic. I think it's always something relevant to understand. I always start off by saying lightning doesn't strike twice. What caused the 2008 crisis is probably not going to cause the next crisis. Also, I think we're in a very healthy economy and that we're not going to see any type of doom and gloom within the next 3 to 5 years. And so I always talk about real estate markets happen between every 18 and 20 years. And as sure as I'm born, you can see that all the way up from when we started recording this data in the turn of the 19th century.
Right.
It starts with something called optimism, where we get excited about the market, we see building, we see growth. That leads into excitement. And some of us very quickly start making quick money. And that's something to be aware of and concerned of. That's something as we go from excitement to euphoria, people making 20 grand, flipping a contract, making 80 grand, doing a fix and flip. That's something you have to be very aware of, that it's just not going to last forever. The good news for us is we go all the way up to euphoria, it starts going down to denial, fear, panic, depression, and then starts going back from hope all the way to optimism again. The great news for us is we were in a euphoria. I remember the first flip I ever did, I made $100,000 on.
Oh, wow.
And thought, oh my goodness, this business is too good to be true. And the truth was, it was.
It's not going to last forever, right?
Yeah, and so we have to make strong fundamental decisions, make sure that we're leveraging our capital and our money the right way. As we go through that, we're actually by that euphoria, but we're actually taking a step back in our market, more into that excitement mode.
Okay.
We're in Denver, Colorado. We're seeing a net positive gain when it comes to new people moving in. And there's a lot of great things happening in Colorado. You can't beat the mountains. It's still a very affordable town compared to the West Coast. And we're seeing a lot of things stabilize with our building and what's happening here locally. And so I think we're going to have a wonderful market here for years to come. And you will see appreciation, see growth within our market.
Perfect. Just kind of talking about the market, what are some indicators that we normally want to look for, kind of giving us a signal of maybe a crash or a recession happening again?
Oh, Lauren, that's a wonderful question because that's absolutely, we want to look at these indicators and say, what are some of the precursors that we've seen in the past to crashes?
Okay.
The first thing we see is rising interest rates. And I always say interest rates, as they go up, your buying power goes down.
Right.
Now, we saw a little bit of a bubble there, and people were almost going hysterical, saying, oh my gosh, interest rates have gone up to 5%.
Right.
Well, you and I have not been in an era, in an environment where even my first primary house, I bought it at 5.25% on an FHA loan. And I was ecstatic with those rates at the time. And so we have to understand that we're still in a very historical low.
Absolutely.
Rates have gone down a half point. It took a little bit of pressure off of the market. Do we think they're going to continue to tick up? Absolutely.
Yep.
They have to, and it's a good thing for a strong economy and a strong currency and market.
And comparing, I mean, what we're at, 5%, right now, and back in like the 80s, what was it back? I mean, the rates were at like
8%, 12%,
8, 12%.
absolutely.
So we just been so conditioned with these lower rates these past, few like years. So
Lauren and I were in diapers in those markets, but we know historic. The other thing we want to look at is default rates. We're at historical default low. And why? Because of the equity that people have been able to put into their properties and get through our strong market. And so even when they are having financial distress, the best part is if you are in that situation, you can talk to a realtor, you can pull cash out with a mortgage broker. There's different financing and different ways to do that. And because of the equity, we're able to do that. Another things we want to look for, stock market crash. Stock market's like a speedboat, where real estate's like an aircraft carrier. We move a lot slower than the stock market, which is a good thing because we can pivot and be able to look at different markets. The other thing is we look at oil and energy crisis as a strong indicator of a precursor to a market crash. I just filled up the tank this morning. I was at about $2 for my gas, and we're doing a lot of stuff from an oil perspective, but also from an overall general clean, sustainable energy.
Yeah.
Our government's put a lot into energy sustainability and sufficiency, so that's a wonderful thing that's happening. That's what we're saying. All these major things that we talk about for a market crash, we just don't see those major indicators, and that's a great thing. Now, should we keep our eye out for them and look out for them? Absolutely. But it's stuff that we're not too worried about right now.
Okay, wonderful. Kind of just, we talked over the market cycles. We talked over, some indicators of, might be a signal for a market crash. Let's kind of go over what did last year look like, Brian, here in Denver?
Yeah, we talk, MSA is what we call like the metro area of Denver Metro. Our population has actually increased to 2.7 million, I think was the latest statistic on that. It looks like a 1.4% increase.
Okay.
We've had 80,000 people move into Denver Metro, which what we're hearing is what we call a net 30,000 gain, meaning about 50,000 people moved out, 80,000 moved in. That number has actually decreased, where it was a net 50,000 and a gross 100,000 in 2017.
Yep.
Home values and appreciation has consistently gone up at about a 6.5–7%, which is less than it was in years prior, but still very healthy, very consistent.
Absolutely.
Median home prices in Denver are at about 400,000 to 425,000. Median list prices have gone up about 465 Denver Metro, and then our median sales price, which is the most important statistic there, is about 410,000. So those are the numbers that we're looking at. Rent has continued to increase.
Yep.
A single family 3-bedroom 2-bath is right around $2,100, which is somewhat a concern, because some renters, you might be pricing them out of the market. For a renter, that's a lot of money to come up with. But we do have a healthy jobs, healthy economy, and even our cost of labor and our blue-collar workers, their wages have gone up significantly, and our local government, schools and stuff, we're seeing an increase in that to kind of help with that demand. So that's primarily the stats that we're looking at there. We're going to see something similar in 2019, but a little bit of a softening, which what we talked about is probably a good thing for the market.
Perfect. Yeah, well, you kind of touched on my next question. What are you seeing, for this next year?
As we talked about that, we go into Q4 of 2018, people thought the sky was falling. I know you had some active listings, had some buyers towards the end of 2018, so did I. We weren't getting the offers that we were. Part of that was the turmoil in government. Some of it was the interest rates going up. It was almost a perfect storm.
Absolutely.
But we've seen some of these trends in years past where the market heats up faster. We start seeing buyers start looking at properties in February, going under contract in March, getting that new house earlier than we've seen in the past. But we also lose some of our strong buyers, or people who worked all 2018 to get qualified to buy a house in 2019. And so what we see is it heats up faster, but it slows down faster. What we think within that is our days on market went from 25 to Q4. It was actually about 40 days on market.
Right,
something
and
to take a look at.
We're freaking out over that, right? I mean, we were seeing big price drops on properties, and you know, I think everyone was questioning, you know, where was the market going? And towards the end, we were seeing, you know, numbers start to tick right back up. More showings we were seeing towards the end of 2009 or 2018, and you know, working with buyers currently in the market in, you know, middle of January. Just this past week alone, I mean, there's been a switch that's gone off in the market. You know, I'm having buyers show up. You know, when I'm showing homes, there's already buyers there. I'm showing my buyers, and then as I'm leaving, there's buyers in the homes right now. So it's great news what we're already seeing, you know, for such early in January.
And what we talked about, boring is good. You and I even did some listings in the tail end on the sell side of 2018.
Yep.
What we found out is finished product. You can't get away with selling your rundown old rental for retail. People are very much credit rich and cash poor in this market. And so what they're looking for is finished product. Mom wants that beautiful kitchen with the granite countertops, the finished cabinets, upgraded bathrooms,
Absolutely.
and so forth. And so they're willing to spend top dollar for finished product. Those types of properties that we've done with investors have actually flown off the shelf very quickly. And then it's also that whole boring aspect. Our buyers, they can breathe. They can think about it a day before making a decision. We're not dealing with multiple upon multiple offers. From the sell side, I'm telling my clients, get your product on the market, get your houses on the market early.
Yep.
From a buy side, there's no pressure. If we need to capture stuff towards the end of the year, then we have the ability to do that. And so I think you and I are very much in that patient realm of, with our buyers and sellers, let's be cautiously aggressive. And make smart decisions, and we're okay with you buying a house this quarter, next quarter, fourth quarter. What we really want to do is make sure we focus on our buyers making the right decisions and helping our sellers get a product that they can be proud of and looks like finished product, whether that be fully staging a project, making minor upgrades to a unit, just making sure as we get that first impression that it comes off as clean and as beautiful as possible. Now, we talked about some of the predictions. I always like to talk through when I come to real estate. I have only 2 rules in real estate. 1, it should be profitable, and 2, we should have fun. We're not curing cancer, saving lives here. We're in a really fun industry and a really fun business. We want to help our clients do that, make sure they're making money, but also having a lot of fun. I love every time something goes under contract, every time something closes. It's a really fun business to be in, and I think there's a lot of opportunity both still here on the investment side as well as on the retail side of the stuff. As far as our hot markets to look out for, we love Southwest Denver right now. It's definitely an area that we're going to see continued growth. There's still inventory and possibilities for fix and flips, first-time homeowners. Lowry, of course, is super hot. Wash Park has calmed down a little bit, but what a great area. We're seeing that North Aurora is a place that with the hospitals and the VA.
They're doing so much to that city. It's fantastic.
Yeah, and so I know a lot of people have been gun shy in that area. We love that. We've got 2 listings coming up in February in those areas. And so we'll see a lot of those types of markets. And we always talk, if you want to know where to invest, follow the mayor. Where's the local government putting their money? That's a great place to invest, great place to piggyback onto. I think Jerome is going to talk through some of our market predictions and what we see kind of going on with that, and hammer stuff home with just exactly who is IMG, what do we do as a full-service brokerage firm, and how can you guys leverage us as an asset.
Awesome. Hey, so now I've got Jerome here with us. He's the president of Investment Management Group, and just wanted to get you here and just kind of share about what you're seeing, for the market for this next year.
Yeah. So for 2019, none of us have a crystal ball, but
I wish we did, right?
Yeah, right.
That'd be amazing. We'd be so rich.
The good news is, if you're in real estate and you invest, you should always be buying. So no matter if it's up or down, there's a way to make money. But you also have to understand there's no get-rich-quick scheme, because we've all tried. We've all been
doesn't
there.
work.
We've all fell for that pitch, but
it sounds good.
Yeah.
It sounds really good.
we all want to get rich quick, right? But in real estate, it's buy, hold, wait for a pretty long time. And
Yep.
we've been doing it for almost 15 years, and we're finally getting to the point where we can get our get rich quick scheme going. So
Yes.
so our main advice for investors are basically buy and hold, make smart decisions, and that's where we come in. We have a really good tab on the market at all times, and whether rents are going up or down, people need to rent. So
Yep.
and in the long term, your primary home is your best investment as well. So thinking about where you're going to purchase and how you're going to purchase is something we help homeowners with as well as investors.
Absolutely.
So I think back to our advice to homeowners is obviously location, and thinking long term.
Yep.
Short term thinking is really for the fix and flippers, I think.
You just pretty much got to go where the price is right for a fix and flip.
right.
Being able to get that asset, under market value. It doesn't really matter where it is.
Exactly.
So
and
make sure you
knowing
get
your
underpriced.
financing options and being able to leverage your investments properly, and that's also something we can help out with.
Yeah.
We have really good relationships with capital investors and banks, and you name it, we can help.
And investment management group. I mean, y'all's main focus that you kind of got started on was in the rental market. How can you kind of touch on what the current rental market is looking like for us?
I think right now we're seeing a good plateau. Rents kind of got a little crazy there for a minute, which was great for investors.
Absolutely.
And,
that kind of cushions any types of errors that you might have made in
Right.
purchasing the property. Maybe maintenance costs that you weren't aware of, right? You were able to kind of cushion it. But now things are getting a little bit tighter.
Yeah, that helped the new investor out by having a
Right.
higher rent. But now you have to be a little bit smarter about your purchase. Margins are a little bit different. The average rent prices kind of tick down a little bit, and for single family homes we're around $2,100. So for a 3-bedroom, 2-bath,
Right.
and so if your margin works with those rents, that's where we help out with our clients as well.
And we've seen a lot of growth in newer construction inventory, right? More on the condo side of things. So how do you kind of see that affecting our current rates?
Yeah, so with the increase of all the new multifamily, I mean, there's new condos being built all over town, and some of them are actually hitting market this past year in 2018. So we definitely saw a slowdown in rentals. Begin Q1 in 2018. You list a property, you rented it. But closer to Q3 and 4, we saw a lot of the new product hitting market.
It's competitive. I mean, if you've got a condo in Aurora, built in, 1980s, and now you've got a brand new condo that's like, in the downtown area,
Right.
And they're seeing the crunch themselves. So a lot of those condos are reducing their rents.
Exactly.
So
and
you have to really make sure on your
millennials that want the new stuff are going to the new stuff, and
so you got to be pretty smart on those projections on realistically what
Right.
rents you're going to get.
and don't get in over your head. So, and again, that's where we come in too.
Right.
And we
Exactly.
help out our friends, family, and all our clients. We're full service.
Right. So touch a little bit, on about Investment Management Group.
Yeah, so we're a full service brokerage firm, buy, sell, and manage. So from closing to performing is what we say.
I love that.
we can help you find the right property, whether it's single family, multifamily, and then we get you to closing, whether that's with one of our lenders or your lenders, and then we take it over from there. We manage every part of the process, including renovation services as well. So if you don't know how to renovate a property, We have a full project crew on staff.
It's amazing because contractors is a huge issue that we're seeing in the city. Having good quality work, people show up on time, so being able to have that in-house is a huge benefit working with.
Access to labor, with how crazy Denver's been, you can't find anyone to work for you. And everybody wants more money for it. So we can help out with that, and especially on the buy and sell residential side, if there are items in the home that need upgrading, we can help you out with that. And we could also coach you on what to fix and what's going to matter the most to a buyer.
Absolutely, to kind of get higher rates for your rents, and also if you want to sell your property as well, try and help people exit with the largest amount.
And on the multifamily side, we help you make the property perform properly in order to get that higher price. So we kind of analyze all the rent rolls, and make sure it's doing what it should be, get the rents up, and that's kind of our investment consulting side. So mixed in with our ninja marketing systems, and that's
we're all about that.
Lauren comes in. So
we've got Brian, we've got Jay, we got you, and myself, just all working really hard to be able to help market the property as strong as possible.
Yep.
So
and imgdenver.com, it's easy.